Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Great to see everyone. We are dealing with another morning of quite a bit of weakness to start the session, right? If you take a look at right about the time that we had the UK open, so London, the financial center gets going, we had about 20 minutes of a little bit of a pop, and then boom, going into the remainder of the London Open and into the Asian close, which is 4 a.m., we continue to see the weakness. And that really hasn't changed much until about 8:30, where there was initially about 15, 20 minutes of volatility, mostly bearish. And then now coming out of the 8:30 hot zone. Now, by the way, the hot zones, that's just my lingo for a scheduled high volatility, high volume, high impact event. And as you can see here, 8:30 a.m., Philly Fed manufacturing, unemployment claims, building permits, housing starts. So four big pieces of data hitting the market. It's going to be reacted to. We know it's coming, right? That's the important thing about hot zones, right? That we know they are coming. And please just spend a few moments at any one of the free resources. It could be Forex Factory. Don't let the Forex word throw you. It's a great global economic calendar. Remember, and if you don't look at a global calendar, it may not make sense why the dollar might be reacting a certain way or that yields might be reacting a certain way, bonds, notes, because ECB President Lagarde is speaking. So basically, the kapow for Europe, right? So we've got Powell here in the US, we've got Lagarde in Europe, for those of you that aren't up on the cast of characters in central bank land. So that is what we've got there earlier this morning. Another hot zone, right? We know that there's going to be an event. We know what time it's going to be at. You can also check out the calendar over at Trading Economics. I highly recommend that one as well, mostly for FOMC speaking events that are not listed on Forex Factory, and for my crude oil traders out there trading crude oil futures, uh, the API number, that private American Petroleum Institute number that precedes the crude oil inventories. Speaking of crude oil inventories, we have crude oil inventories today, not Wednesday because of the Monday bank holiday. So 10:30 natty gas storage release, 11 a.m. Eastern, we have the crude oil inventories number. All right. So that's sort of what we are inheriting this morning. It does look like following the hot zone, we've got a little bit of movement higher. All right. So that naturally takes us over to our last pit stop before we take questions here this morning to what on earth is going on with the rates. Okay. So let's refresh this FOMC FedWatch tool. Let's see what we've got here. There we go. So are we still likely to peak in March? Well, March is pretty much what we would call fully discounted once we reach the 80% probability for 4.75 to 5%. May is still leading, our expectations are still leading a hold in May, but the 5 to 5.25 hasn't disappeared, right? So we're still possibly looking at that, probably looking at 4.75 to 5%. We go out to June, we see another hold. We go out to July, we see another hold. Now, the problem going into June, July is that there's still sort of a nagging possibility that we could see another quarter point hike. When do we start talking about cuts? Gang, we have adjusted once again from November, take a look here. From November, we were looking at November, December, mostly December. November's back in the picture for a potential cut, gang. So remember, we're going to hike into March and likely, don't know for sure, likely hold through May, June, July, September. Come November, there could be a cut. I'm not predicting, I'm not prognosticating, I'm not in any way trying to front run what the Fed fund futures are telling us. These are remarkably accurate, not only in what is likely to happen for that meeting, These are also very good at letting us adjust with every single hot zone, every single FOMC chucklehead event, and see what in the aftermath of those things our expectations are. All right. So, with that being said, let's go ahead and jump into the questions. Hey there, Ann from our free trading room. Morning. Have an excellent day. I hope you do as well, Ann. Thanks for helping us understand the market. And, it's my pleasure and it's my job. And I take both very, very seriously. I love doing this and I want everyone to sort of enjoy the process of trading. And then, I think it's our job to get better and better as both traders and teachers. And I say that too, by the way, to those of you out there, teach someone you care about who has a little bit of interest in the market. It will make you a better trader. Explaining these things to somebody else. I went to a seminar once where after every little segment of an idea, the speaker would say, "Hey, now turn to the person next to you and explain what you just learned." Unbelievably different experience. And I think that's why the community we have here at Simpler is so important. Sharing these ideas is a big deal. It helps. All right, so let's jump into it. Bob, good morning. Could I share the link to the chart with the Fed voting and non-voting members? Yeah, it's really important when chuckleheads can't keep their. You know what, Bob? I'd have to dig up that bookmark. Usually, you know what I'll tell you is you can just Google it, the all-knowing, all-seeing Google. FOMC voting members. Let's see what I've got. FederalReserve.gov has a good list. And then yeah, there's a number of them. The St. Louis Fed explains really nicely the FOMC voting rotation. And then, yeah, there's a number of links. I'm trying to find one that I really like. But if you just Google FOMC voting members, you'll run into a whole bunch of links that have that. Let's see. Oh, here's a pretty good one. This is over at a site called Pound Sterling Live. So for those of you wondering what the question is, that's the question is I don't know, can I share this in the YouTube? Let's see if I can do that. And I'll share this in the free trading room as well. There we go. So that's one thing you can look at right there. Okay. All right. Thanks for the question. Let's see. Hey there, Stephen. Good morning. Thoughts on short jets? Airline ETF for a Feb 17 18 put, and whether we get long TLT and a pullback. All right, so let's talk about Jets first. Jets is in an uptrend at this point. I know. So no, I will not get thoughts on short Jets for a put. No. But number one, I won't go out of the money, Stephen, with any strike. I don't want to be out of the money. I want to be in or at, right? Slightly in or at the money. And Jets says as of the 13th, it's an uptrend. It's a very fresh uptrend, but I'm no longer allowed to short Jets or buy puts. And now, if you want to sell puts, I guess that's different, right? On a pullback, if you want to sell puts, different conversation. So if you're asking me about writing premium on the put side, no problem. As far as TLT goes, TLT, this is the first time since we transitioned out of the uptrend back on the 22nd of December. This is the first time we're starting to see a little bit of a possibility of a resurgence of the uptrend in TLT. And that means yields are continuing to be, are continuing lower. And ZB hasn't made that transition. So I'm not as excited about TLT starting to look a little green. I really need the ZB futures, the long bond futures to do that. All right. So anytime I'm looking at TLT, I'm really going to look at ZB. And the futures are not showing that clarity quite yet. Great question, though. We want to keep an eye on that. All right. Next up is, let's see, Tom mentions divergences yesterday afternoon. Okay, let's take a look. Between bonds and indices. Anything to be learned from that? Tom, we've definitely seen since mid-December. This is something I teach in the, as we like to call it, the sector foo room, the sector secrets mastery. I think the bot calls it the dojo, which is cool. But basically, yeah, I know sector foo. Our sector fu approach. Who watched The Matrix here, right? Kung fu, who needs that? Sector fu, that's where it's at. Here's the thing, Tom. One of the ideas that we look at every morning when we're day trading, today will be no different, is are we seeing harmony, positive correlation, sympathetic correlation between yields, which should be going down, meaning bonds are going up, as the indices are also going up. Those are better trading days. I would pretty much bet dollars to donuts if I look at my account and find great follow through days, not exceptions, but great follow through days of the last 100 days, 300 days, right? You're going to find your best follow through is when yields are falling, the indices are rallying, or as bonds are rallying, indices are rallying, right? So we've seen mornings, we've seen days where bonds have been strong and indices are weak, or yields are moving lower and indices are not simply getting the memo. So this is nothing new. We've seen a lot of this. And it just probably goes to show that there are things that are concerning stock buyers that are not concerning bond buyers. There are narratives around equities, whether that be earnings, whether that be recession. There are narratives around earnings that are sometimes going to be different than the narratives around bonds. Now, I will say this, most of the time, I will bet in favor of yields. Who is right and who is wrong? Most of the time, I believe yields are going to be right. So even though we might see that while bonds zig, equities zag, not uncommon. That's not something that we have not seen many times throughout easy the last month, 2 months. Yeah. So anything to be learned from that? It just reminds us still how much confusion there is in an environment where we are fairly certain the Federal Reserve is going to peak. The terminal rate is going to be around 5%. Bonds are already moving in that direction, lower yields. And equities really haven't quite aligned with that because there's something else clearly that is afoot, right? So it's just confusion, two different narratives. That's the way that I look at it. That's the way that I look at it. Let's see, what else do we have here? And by the way, gang, I will say this. I'm trying to do this too. Two changes in vocabulary. One, we don't want to talk about the market, although I think most of us are referring to equities and or more specifically the S&P. There are corners of the market that are quite strong. There are certain stocks, there are certain sectors that are actually bullish. That leads me to the next verbiage that I change that I think everyone needs to make, and I work on it too. Let's not call a day good and bad. That's all perspective. If I'm short, today's good. If I'm long, today's bad, right? But good and bad is actually really a myopic way to look at the market. It's either bullish or bearish. And if we start talking about good and bad in that binary way, it does put us in a much poorer mindset to find opportunity. So things are either hawkish or dovish, bullish or bearish, up or down, right? Good or bad is a very dangerous way to label the market, as is the market, right? Bonds are a market, equities are a market, currencies are a market. So which market are we talking about? But again, I think all of us just sort of by habit think about equities when we talk about the market, and usually specifically the S&P. So yeah, so TH weakness in the morning is okay. It I guess if you're a bear, it's fantastic, right? So I think we have to remember it's bullish or bearish, and which side of the market are we on in terms of the S&P? Which side of the market are we on in terms of treasuries? I am still mostly, especially when it comes to the Dow, quite optimistically bullish. I'm actually still quite bullish equities in general. It doesn't mean we're going to be up every day. I remember somebody asked me, right after the bullish outlook video that I released on Tuesday, wouldn't you know it, we start to sell off. And some people say, well, did you change your mind? I'm thinking, are you mad? Change my mind because we moved down for 3 candles when in reality, if I take a look at July, I take a look at October, this is where we are. I'm not going to change my mind because of one day. We're not even making new lows from December. We're actually in chop. We're closing in on an oversold part of the market. So remember, gang, what is the time frame that we're looking at? Most disagreements or confusions in market analysis comes from what's your time frame? And for the most part, when I'm day trading, my time frame is to noon, maybe 3:50 p.m. Eastern. When I'm swing trading on a daily time frame, my time horizon, my expectation is days to maybe weeks. One of the transitions that Bot and I have been testing a lot of is, gosh, are there opportunities on 1 hour time frames? Are there opportunities to be in a trade for 1, 2, maybe 3 days and use a 1 hour chart, maybe a 4 hour chart to position ourselves for that? So this is where, for example, a 1 hour daily price movement range as I would call this a swing trading type approach because we are going to take it overnight, right? So yeah, let me take, because I think it's one thing to have analysis and talk about that here in Charts and Coffee, but look, no, I'm not going to pull any punches. This environment, the last 2 days have been tough. I mean, I'm not looking at fantastic days. This is going to happen. But I think it's my job and our job collectively to say, what are we doing that's working? What are we doing that's not working? Buying the dip on daily time frames actually in uptrends is working. We had a monster trade in Freeport McMoran, which is a trend follow, right? There are uptrends, yeah. But then you look at something like this and say, Rog, I only want to be in the market for maybe 1 or 2 days. That's all the exposure that I want. I either want to see that I'm right within a few hours or I'm out of here. Here's the red resistance level built on a daily price movement range. There's the follow through. Very different than what the daily is saying, very different than the 5. So we are definitely experimenting with automating, and that's the huge part of it, gang. I don't want to have to show somebody a subjective way that requires decades of experience, right? Even though I've got that, I think decades of experience mean how do I take myself and automate it? That's one thing that we are definitely looking at and have been testing now for coming up on 10 months. And in this environment, that 1 hour chart is likely going to be a very important one for us when we want to take positions overnight, but we have no intention or expectation for follow through for days or even weeks. I hope that makes sense, because we always have to be thinking about, how do you course correct even within, even at the beginning of a new year. All right, so anyways, I'll step off the soapbox now, but I hope that helps. All right, is it possible to create a period PMR? I'm not sure what you mean by that. Is it possible to create? I mean, I have hourly price movement ranges and I have daily price movement ranges. So we're not looking at the time interval of the chart itself, but we're looking at a span of time, whether that be a single hour or a single session, right? That's the way we do it. So we have hourly and we have daily, and that's what works the best that I have found. And again, I've been using these in some form or fashion for over a decade. So we continue to improve the process and the trading strategy behind it. Most of the news channels are talking about the debt ceiling, unsure if that's impacting the market. Trader Momo, there was a number of our traders that asked about the debt ceiling yesterday. And I'll always say the same thing. I look at my Twitter feed, which I'm looking at here on my other screen, and I'll start asking myself at what point am I seeing the debt ceiling conversation making the rounds? Um, it was not really making the rounds much yesterday, and quite frankly, it's still not making um, much of the rounds today. Could that be one of many narratives that's putting pressure? Absolutely. I would imagine it is, but it's not something that we didn't know was coming, right? So this isn't something that all of a sudden in the last 48 hours we were aware of. This has been looming like that cloud that follows Pigpen everywhere around. We know. So I'm not sure. It sure isn't helping. To your point, it sure isn't helping the bulls, right? It sure isn't helping buyers. All right, Juan, what is the best site to see economic announcements? Um, Juan, I like Forex Factory. We use Trading Economics. Bob mentioned Econoday. That's another one that I know Bot looks at. So Econoday, Forex Factory, Trading Economics. Those are three that I look at. Now, going into earnings season, for earnings releases, I'll use Estimize. So those are three, if not four calendars that I think all of us could use and spend a few minutes on every day. It will absolutely it will absolutely help us out in terms of understanding when a lot of opinion and a lot of volatility is going to hit the market. Yeah. All right. Next up is Jim says Barron's had a great article on who is in the Fed last. Oh, very cool. I'm sure it's on their website. Cool. Thanks for the share, Jim. I appreciate that. I appreciate that. All right. What is my insight on silver? Sure. I'm not as bullish silver as I am gold. Gold actually looks, I think, at like a cleaner uptrend because take a look at silver. It's been stuck in the daily price movement range, and we haven't been punching up to higher highs, and we don't have a series of higher lows. But look at gold. So my insight into silver is it's buyable, D, but I'd rather be buying the dip on gold, and even more so, I'd rather be buying the dip into the daily price movement range. You can see how ridiculously accurate those have been in terms of movement. By the way, for those of you that are completely new to this concept of, hey, what are these? What is this lingo, Rog? I've never heard of a PMR. All right, February 15, I'm going to be explaining that and a whole lot more market structure, as well as what a price movement range is. It's not typical lingo for trading because it's something I created uh, about a decade ago, and starting in the forex markets, by the way. So we're going to talk about that in a little bit less than a month. And again, as Lorna Bot and I have been testing these rigorously, we're finding that not only are they very powerful on the daily, they're becoming more important on the 1 hour as we struggle to get clarity, very short term, day trading wise, and even long term, daily wise. So we'll find a way to adapt strategies to different time frames to find that follow through that we need. I mean, that's exactly what we need to be able to do, it looks like, as we kick off 2023. All right. So, gang, I am out of time. I will see you all tomorrow. Same time, same station. Thank you, as always, for bringing all the great questions. I do appreciate it. And I will see you all tomorrow at 9. All right, gang. Be good to each other.